Hey, accredited investors, I'm excited to announce that we have a new deal right now. It's a 78 unit building, 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below. Always consult with a tax advisor, financial planner, and/or attorney before making investment decisions. Having said all that, all you need to do to learn more is go to homeinvest.com or click in the description below.
Do you wonder what is coming in the real estate market? Have you heard the news that multifamily is going to crash or that small banks are going to get crushed? If so, this is the episode for you. Welcome to Purpose-Driven Passive Profits. His name is Nate Armstrong. He's the founder and CEO of Home Invest. My name is Steve Warner. I am the Chief Investment Officer, and you're listening to Purpose-Driven Passive Profits, where we believe in helping you make passive profits, retire 10 to 15 years earlier, and do it with meaning in your life. We believe in freeing you up so that you can go live your purpose. You are in the right place. Nate, how are you doing today?
Steve, so good, man. Nice to be doing this episode.
Awesome. Well, let's talk about this a little bit, because I know personally, I've been on the phone over the last couple of days with a lot of different people talking about investments, talking about doing multifamily. And one of the questions that it takes a little bit, but then they always ask is, well, I've heard that banks might be going under, or that there might be this surge wave of foreclosures coming in, and multifamily might melt down and interest rates are going up. Are we really secure? What's really going on? So just kind of break this down for us a little bit. What do we see coming in the next, 3 to 6 months as around foreclosures, multifamily, and office buildings?
Yeah. So I'll talk to foreclosure first, and then I want to get into these multifamily loans, and then maybe even commercial loans as a broader context. So in the single family realm, there are foreclosures coming right now. In the office realm, there are foreclosures coming right now. There's a little bit happening with multifamily, but not very much. So let's break each of those asset classes down. So in single family, because there was a lot of COVID Band-Aid money that was issued in the midst of the COVID pandemic, a lot of people that maybe should have lost their properties during that era, they didn't lose them because the government mandated that all lenders could not foreclose. All of those mandates have now been lifted. And unfortunately for the folks that took money in their single family houses during that era, what happened is they took the money as a temporary Band-Aid or temporary relief, and all of that debt that they didn't pay during the period in which they weren't making mortgage payments, it got stacked back onto their loan. It didn't just go away. It wasn't forgiven. It didn't get wiped out. It's still there. It just got stacked on top of what they already have to pay. And now the reality is that now they're forced to pay that. Some of these people have increased mortgage payments because of that accumulated debt that just stacked up on them. And so when someone that's in that position, when they maybe get cut back on their hours or they lose their job as we go through the recession, those are the people that are they're giving up. They're walking away from their property. So single family houses, the foreclosure rate is up for the first time in a couple of years right now.
Okay, so single family is on the rise. We're hearing about that in the news, but now let's talk about multifamily a little bit. What's going on with multifamily?
Yeah. There was a Wall Street Journal article that you and I covered on a different episode, but that one kind of has this buzz in the air, and a lot of people are thinking that must be the entire multifamily sector. There's one foreclosure that happened down in Texas, in Houston, primarily because the folks that bought that multifamily property, they didn't anticipate the taxes going up. They didn't anticipate interest rates going up so much, and they didn't anticipate their insurance rates doubling or tripling. And when they went to go refinance to pay off their short-term loan, they got caught in a bad spot. And so unfortunately, they did lose to foreclosure, and that made national news. But multifamily as a whole is not in that position. Folks in Texas and Florida that are experiencing tripling in insurance rates, yes, they're in that position, but multifamily as a whole is not in that spot. The spot in the commercial world that's really getting hammered right now is office and a little bit of retail. Office space right now, it's been this way since the COVID pandemic. Office space right now is there's huge amounts of vacancy. And banks did a ton of lending to commercial operators as a whole. And now a lot of those loans are coming due, meaning, and Steve, maybe we should explain this just so it kind of makes sense. Like when most people go and borrow money from the bank to buy their house, the bank gives them a 30-year fixed mortgage. In the investing world, that would be really, really rare. To go buy an office building or buy a multifamily property, you typically don't get 30-year fixed mortgages. There are a couple of options for it, but most investors choose to take either a 3-year note or a 5-year note, and then they're forced to go and refinance at the end of that. And so a lot of these people that bought office spaces 3 years ago or 5 years ago, and then they've suffered through vacancy during COVID, now they're trying to go and get new loans, and they're finding that they can't. There's no market for it because they have so much vacancy and interest rates are so much higher that their building just doesn't make sense, and banks are saying no. Those are the big wave of foreclosures we're going to see. That's going to be the biggest wave that hits the real estate market over the next year and a half, 2 years.
Yeah, I absolutely agree with that. So all of these things that we're talking about, right? First off, single family home foreclosures. Then we're talking about the houses or the multifamily that is in Florida and Texas that now has the rising insurance. Those people can't get new loans. And then we're talking about the office buildings where also they can't get new loans to refinance. Why does all of this actually benefit the investor? Like, this is what I want you guys to catch if you're listening to this show. Like, all of those things that we just talked about, they sound doom and gloomish. All it is one wave falling so that the next wave can rise. How does this actually benefit us as an investor, Nate?
Yeah. So right now, banks are looking for safe places to make loans. So what is a safe place to make a loan? Multifamily real estate is about the safest that you can get in the real estate sector during the midst of a recession. If you just go back and look historically at like what happened to rent rates as an example, for the folks that are watching us on video, you're going to see a graph that pops up. For the folks that are just listening on audio, I'm showing a graph right now of basically what's happened with rent rates since the 1940s. And overwhelmingly, what's happened since the 1940s is rent rates have gone up. There's one period during the last big recession where rent rates flatlined. They didn't go down, they didn't drop, they didn't like jump into panic mode. They flatlined for a little bit. And then they kept going right back on up to bring us to present day. And so I say that because typically during a recession, which it's clear that we're entering one now or we're already in one now, we in the multifamily sector for traditional rentals, human beings living in the property as their main dwelling, that is actually a safe play in the real estate market. Offices and retail and all that kind of stuff, hotels even, the Airbnb market, that stuff slows down when businesses are closing and businesses are laying people off. All of that stuff slows down, but people still need a place to live. And so I anticipate that rents will continue to rise. Yes, there are some cities that shot up a little bit too fast that are coming down a little bit in their rents, but I don't see a big crash in the rental market, not the traditional rentals, not long-term annual rentals.
Right. I mean, they're not going to. Everybody needs a place to live, and that's what keeps them exactly where they are. In the terms of foreclosures that are going up right now in single family, well, we invest in single families. If there's a lot of foreclosures, that gives us an opportunity to go in because the banks don't want to own those. The other thing that I'll point to is these properties that are in Florida and Texas right now that are up against the wall. Eventually, if they get handed back to the banks are going to have to sell them, and they're going to have to sell them at what is dictated by the current rent rolls. By them doing that, that's going to give a lot of opportunity for people to come in and buy them and put the right financing in place, put the right insurance in place, and know what the taxes are, which is what caused that right now, right? If you were to go buy something right now, Nate, in Texas, multifamily, would you buy multifamily in Texas? You think it's a little overheated right now?
So I would, as long as just what you were saying a moment ago, like as long as I can underwrite it with today's numbers, which means triple the insurance, double the taxes, and then look at a baseline rent that's actually reasonable, sure, I'll go in. And I'm going to factor it with today's interest rates. When the interest rate's higher, it usually means I'm going to pay less for the property. And so if I can use today's economics going in to buy, I'll certainly buy if the numbers will line up for us. Yes.
Right. And that is exactly what's going to happen. So that kind of frames this. If you're seeing all this doom and gloom in the news, it's not really doom and gloom. It actually is where we want to be. If you guys can think back to 2007, 2008, if you could go in and buy a property or invest in multifamily during that time, where do you think you would be at right now? I want you guys to use that lens when you think about investing, because right now, if you make a good investment, this is the time that you get in. Like the next couple months to a year, maybe year and a half.
That's totally it. Like 1416 6th Avenue South, St. Cloud, Minnesota, 20 unit building we bought. We bought it during a time of panic. Everybody in the market was freaked out. We got it for $492,000. We cleaned the property up, we rented it out, we did what we do to our buildings, and we turned around and sold that one for $1.7 million. How do you enter at less than $500,000 and sell for $1.7 million? You buy it when everybody else is running. It's following Warren Buffett's simple principle. His simple principle is when everyone else is greedy, you run away. When everyone else is running away, that's when you go be greedy. And that's where we're at right now, Steve, just like you said.
Awesome. Well, to you guys listening, I hope you found some wisdom in that. If you have questions or comments, as always, you can leave something down below. If you're watching this on YouTube, if you're listening to the podcast, you can feel free to email us. And if you'd like to book a call to talk with us about our investment properties, I know you heard about it at the start of the call. You can go to homeinvest.com. That will get on my calendar, Nate's calendar, or Sue's calendar. Any of us would love to talk to you about our current multifamily investments, which are paying out at up to a 16% internal rate of return, about a 1.8x multiple. Put in 100,000, get 180,000 out. We'd love to speak to you about those. Until next time, make sure your investments are safe. Use your mind when you're investing, and we will see you soon on Purpose-Driven Passive Profits. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Oh, so I'm excited to announce this. We've got a 78 unit building, multifamily property. It's 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below.